The Alliance for Charitable Reform is a project of the Philanthropy Roundtable that educates legislators and policymakers about the central role of private giving in American life and the importance of protecting philanthropic freedom. I'm Marcus Chavez, Communications Director at the Alliance for Charitable Reform. Today I'm joined by Eugene Steuerle, who serves in the Richard B. Fisher Chair at the Urban Institute. He's going to join us for a few minutes to discuss some findings from a study put together by the Urban Brookings Tax Policy Center examining the effects of the Camp proposal on charitable giving, correct?
That's correct.
All right. And you're also a member of the newly formed ACR Advisory Council.
That's right. I'm honored to be in that role.
All right. Now, this actually is a joint project for the Tax Policy and Charity Project. Can you explain a little bit about that project?
Yes. A few years ago, some foundations came to us as some of the issues affecting the charitable sector were heating up and asked us to try to be somewhat neutral, to the extent possible, at least disinterested party in trying to show what the data would tell us on what these various proposals would do to the charitable sector. This Tax Policy and Charities project is actually a joint venture of both the Tax Policy Center, the Urban Brookings Tax Policy Center, as well as the Center on Nonprofits and Philanthropy here at the Urban Institute.
All right. Well, let me go ahead and ask you a couple questions about some of the findings that you had in this study. First of all, let's talk about the overall effect on giving that the proposals in the camp draft would have on charitable giving. Can you discuss that a little bit, just in the general terms?
Right. Well, one has to remember that the camp proposal is an attempt to conduct a very broad reform of the tax system. And in many ways, I think the chairman was very courageous in taking on a huge number of interest groups. I'm not defining the charitable sector as an interest group, but he took on many interest groups that other elected officials were afraid to actually touch. And so it's a very comprehensive proposal, and that's important to remember because most of the effects that are predicted as to what they would do to the charitable sector derive from provisions that aren't specific to the charitable sector at all. Best example might be an increase in the standard deduction that taxpayers could take in lieu of taking itemized deductions. That was not an attempt to do anything to charities, but it would have an impact on the number of people who would take the deduction and therefore probably have some effect on their incentive to give.
Right, I kind of see that as we've said with ACR as well, as we applauded him taking on this huge effort, and everything is so intertwined that everyone gets affected by whatever these proposals are.
That's right, and to me, one of the important issues is not just what's in the camp bill, but are there ways to restructure many of the good things in there. I've testified many times and argued that I think it's quite possible to have a tax reform that both strengthens the federal government's fiscal situation and strengthens the charitable sector at the same time. It doesn't have to be a them against us type of debate, even though anytime you change anything, whether it's tax law or welfare laws, anything, there will be, in the narrow sense, winners and losers.
Right. So what is the effect that this proposal would have on charitable giving overall?
Well, overall, the camp proposals, we've estimated it. This, thanks to the work particularly of Joe Rosenberg in our Tax Policy Center, would reduce charitable giving by about 7 to 14%. And that comes about, as I say, mainly from provisions that aren't directly affecting charity. It mainly comes from other provisions, such as the reduction in tax rates for taxpayers, which is one of the goals of tax reform. You try to broaden the base and lower rates. If you do that, that actually reduces the incentive to give, because if I used to be in a 25% bracket and now I'm in a 15% bracket, I used to get a 25-cent subsidy for every dollar I gave. Now I got a 15-cent subsidy for every dollar I gave. So the overall effect overall was about 7 to 14%. About one third of that came from the provisions directly affecting the charitable sector. I should also add a huge note of caution. We were able to estimate a number of these provisions to some extent, but some of them, like the proposal to allow charitable giving up to April 15th, we don't really have a strong number there, and we don't have that in our estimates. We think that would actually increase giving. And actually, I have suggested that particular proposal for over 20 years, and believe it would actually have a strong positive effect on charitable giving.
Yeah, we actually saw that proposal just pass the House recently. It says some of the ACRs championed as well. So what would that mean then in terms of actual dollars? How would that affect the giving in actual dollars?
Well, as I say, our estimates say that total charitable giving from all the provisions would fall by about 7 to 14%. The way this is derived is that currently taxpayers on average who itemize their deductions, for every $100 they give to charity, they pay about $77. That is, on average, they get back about $23 from the government. That's an average across all income groups who get the charitable deduction. That $23 of subsidy from the government would fall to about $12 of subsidy. So now instead of paying $77 out of the 100 they gave, that's what the taxpayer pays, now the taxpayer would pay about $88.
So since you talk about how there are different policies in the CAMP draft that affect charitable giving, even though they may not be directly related to charitable giving, such as rate structure or increased standard deduction, let's talk about one of the provisions that actually is specific to the charitable sector, and that's a 2% floor. Could you go ahead and explain what the 2% floor is, and then what the effect would be on charitable giving if a 2% floor were implemented?
Right. The 2% floor essentially requires taxpayers to remove all charitable giving up to 2% of their adjusted gross income from what they get to itemize or deduct. So, simple example, if I make $50,000 a year, any giving up to $1,000 would not be deductible. That's 2% of the $50,000. Any giving above the $1,000 would be still be deductible as an itemized deduction, assuming I still itemize.
And so, what would the cost be then for taxpayers if 2% floor were implemented?
There's a very strong economic rationale for a floor. Let me start there, because the argument is that the incentive to give applies for your marginal gift. So we tend to give some amount no matter what, say to our church or synagogue, our mosque, or we give to our kids are in school, and we give to the school activities, to the local Girl Scouts, Boy Scouts, whatever. And so the argument is that you want the incentive. Incentives are most effective where they apply at the margin, that is for the next dollar. So in this case of this taxpayer making $50,000 a year, an incentive really makes a difference if I think in giving more than the $1,000 I usually give. And people on average, this is a rough average, but on average give about 2% of their income to charity anyway. So the idea of a floor is actually a very good idea, because the floor was put at a 2% level in this particular bill. It would affect a significant number of taxpayers. As I say, if the average giving is 2%, then everybody giving up to the average would no longer be allowed to take deductions, and people giving more, you'd have to give more than the average to be able to take the deduction. And as a result, that combined with the 40%, we didn't talk about this, but they also have a 40% cap on charitable giving at the top, in the sense that you can only give under the bill, you could only give up to 40% of your income with carryover to future years. You can only give up to 40% of your income and have a deduction. In excess of 40%, there would not be a deduction allowed unless you could carry this over to some future year. Under current law, it's 50%. So the combined effect of those two provisions would be to reduce giving by maybe between 2 and 4% total.
I think we've covered a whole lot of areas here. Is there anything we didn't cover, or you think people would want to know about either your study or the CAMP draft, or how this affects how this proposal would affect them?
I again would just really caution everyone to be very careful about not pinpointing one particular aspect of a bill and making a total judgment on the bill. The bill attempts to do an enormous number of things. I personally think, if I can give my personal opinion, this is not an empirical statement, but that I think it does a lot of good in a number of areas, and I think that's important to be considered when you're considering the bill. The other issue that I really would like to suggest, this goes back to my argument, that I think there are ways of both strengthening the fiscal situation of the government and strengthening the charitable sector at the same time. So I've offered a number of proposals, some of which the chairman actually included in his bill. We mentioned the proposal to allow giving up to April 15th, which I think would be a powerful incentive for many people because they could actually see the full benefit of the charitable reduction. Most people way underestimate the value of the charitable deduction when they make it during the year. If they were filling something out if they're making a charitable gift at tax filing time, their accountant or their advisor or their TurboTax software would tell them, hey, if you give another $100, you can get another $25 back right now. We can get it for you. I think that would be a powerful incentive. The chairman also reduced the excise tax on foundations, which I think was an appropriate thing to do. There are ways, as I say, to strengthen the charitable sector. The other thing that I believe is possible, I believe it's very possible, as I mentioned earlier, to do things like exchange a floor of the right size for a deduction that would extend the incentive to all taxpayers. So if all taxpayers got an incentive to give above some minimal amount, that would actually, I think, strengthen the charitable sector as a whole. So there are ways of thinking about this bill and the issues that it raises that I think could be positive all the way around, and for the good of the charitable sector, for the good of the country.
Yeah. Well, thank you for taking a few minutes to discuss these. Fascinating conversation.
Thank you very much.